Hey, Alpha fam, welcome back to another episode of Alpha Commission. Hope you guys had a wonderful weekend. Of course, lots of coins have just been bouncing from the bottom there. I think we saw some coins like Cadena actually make, a 100% gain. Some of these other coins just making, up to 100% gains, which basically means that if you had no fear at the bottom there, that you could have doubled your money and that would have been quite interesting. I think if we go back to the origin channels that I made, and then we take a look at the buy zones. We would have had one buy zone here where we're pretty much break even with. I think that you could have to make some hard decisions. However, there was a bounce above that area. We originally hit it right here, like on the dollar almost. So that was a pretty good trade. And then just Bitcoin alone bounced almost 10%, which of course, if you translated that to alts, could have been anywhere from 20 to 50%. And so that would have been a great play. As soon as it started to turn around, however, you might have wanted to take your profit on that, right? I mean, these are DCA points, but as long as we're in the context of a macro downtrend, you guys know my opinion, right? I think there is a strong possibility that we could hit extreme low levels. And I'm not trying to encourage anyone to be a hero and hold on to these positions. Personally, I think that if you get a great buy and if you have an opportunity to sell, what's the motto of this channel? Always be selling, right? Always be selling. So you don't always have to be trading, but if you get yourself into a trade and we are in a macro downtrend, in a bear market, in macroeconomic global circumstances which are pretty bearish, and where we're likely to continue to be attacked by things like declining stock market, the Federal Reserve hitting us with increased interest rates, quantitative tightening as opposed to quantitative easing, which was happening 2 years ago. And then, of course, all these curveballs that could happen, such as, acceleration of war in Ukraine, which, by the way, the whole point of that isn't that we're afraid of nuclear war, in particular. I mean, that's a concern because, these guys in power have very weird ideas, and we've seen nuclear weapons used before, right? The US has used them. I don't put it past Putin or, any Russian power to potentially want to go down in history as another country that uses them. So we have to be aware of that. That curveball does exist. However, the main issue, of course, is the damage to the European markets, and then, of course, damage to other markets that are being affected by the embargoes that are being placed on Russia, and that also Russia is placing on the seas around Russia because as it tries to block, ships and shipments going into Ukraine. This is causing food shortages and blah, blah, blah in other parts of the world. Okay, so the supply channels are basically under attack right now. And as long as that war goes on, it just gets worse. Okay, guys, it just gets worse. All of this has a dampening effect on the economy. And so, again, my motto is if we're in a macro downtrend, if we have all these bearish conditions, and it's not looking like it's going to turn around pretty soon, then I don't care what the fear and greed index says. Guys, like if you've been simplistically trading off of the fear and greed index, yeah, that worked really well in the good times, okay? And like on net, you can always be up. But those things really have no importance in a downtrend where there's just things outside the world of crypto that are impacting the markets. And so, yeah, if you got a great buy spot right here, which we did, right? We got almost to the dollar, like this great buy. You just bought in this little zone, and then you traded it at the top of this range. You took your profit, And then what's the whole point of doing that? To have cash in your wallet in case we drop lower. Usually there's two drives down minimum at any type of Bitcoin crash. And so what we have? We had a second drive down. And where do we hit? Again, almost to the dollar. I mean, I can't say almost to the dollar. It was like $500 away. But hey, this was pretty good, okay? This range was pretty good because look what you got. Let's just say that you DCA'd in here, and then you weighted it towards the bottom of this area. And then you got pretty much like a 20% bounce, okay? Yeah, sorry you didn't miss the absolute pico bottom, okay? Mr. Trader man. But hey, like we're just doing our best here. And, there's no crystal balls that can tell us exactly what's going to happen. And then what happened? We didn't even break this high, right? So if we didn't break this high, then I would suggest, again, taking your profit as soon as you see that turning around. Sure enough, it started turning around. And this is a significant drop. We're now below our prior DCA area, and we could have the threat of coming back into this DCA area if this region doesn't hold. I'm going to show you what the conditions are for that in a couple minutes, but just to be open-minded that this DCA zone is still active. This right now is a trade zone. I think we're actually in this kind of a channel up here. All right. And if you look at this channel, it's basically, let me just mark this out. It's basically just this kind of like diagonal channel up. Could we pop up at any time? Yeah, sure. I mean, that's possible. You can get these kind of, nice W's, right, or something, and kind of shoot up. And if we start taking out this yellow line up here, somewhere around 40,000, and get up to these, I mean, it's just a major climb that's ahead of us. Okay, like let's just be realistic and let's just deal with what's in front of us. We're in the middle of this kind of range, and we can even consider that these two DCA zones are within one range, right? And that we're just kind of in the middle of it. So let's see if we come back down here and if we get a nice bounce and if we can get to the top of that range, maybe that 35,000 that a lot of people are talking about because it corresponds to a CME gap, which is a professional gap in the pricing, which the data services, they like to fill that gap, so they push price action towards it. And uh, if we are not able to break above that, then probably it's another place to take your profit, and then these DCA areas stay alive. And if we aren't even able to muster that type of a bounce, let's just say the markets are too bearish and that we kind of work our way down, then you might want to consider just this DCA area and be open-minded to this one in this kind of $22,000 to $23,000 area. A lot of people are targeting 20,000. I just think that that could be a reason why it would be good to target 22,000 as opposed to 20,000. I just think, just like this wick kind of like pushed up super fast, you might not get what you want, and it might just be a wick down to that area, and your orders might not get filled. So just have your strategy in mind. I'm not the boss of you. I'm not going to tell you what to do. Just trying to build in some expectation. However, I'm not going to dismiss that there's the possibility that we still fill in that CME gap at 35,000 and that we do see some upside. It's just that it's looking very tenuous right now. Okay. And let's go ahead and just let's jump over to, let's see, this chart that I was on previously. I took a really just the most conservative, model of the 2018 fractal because I kind of wanted to give the extreme case previously, but now that we've seen some buy pressure actually here, and we've seen a pretty fairly sizable bounce, right? Like comparable to the kind of bounce that we saw at the bottom of the markets in summer, last summer. Obviously, that one had a lot more buying pressure to just keep it going, and this one just fizzled out incredibly fast. What I would suggest is that we take a look at the fractal within that context, and instead of matching these areas so much, then we just kind of match this height and these heights, and then we could get a very conservative fractal play of somewhere around 25,000. Like, let's just say that we drop down and 25,000, and then perhaps range for months, maybe even towards the third quarter. And then just one day, this type of God candle just sends us up because somebody's accumulating, right? And from there, we just play it by ear. Now, what would happen if we just had like a pump right now and we saw something like this? I mean, that might be a nice bull run. Everyone would get super excited. We'd make a lot of money, but it would probably fizzle out because of the Fed and everything going on in the world. And most likely that'd just be something to just send us even lower, right? Because once you build in that steam, you're going to fizzle out if the conditions aren't right. And it's just going to bring you lower, kind of like this, right? Kind of like that. And so, of course, you know, which one is better, to have a bear market for months or to have a bull run and then like an extreme low, like those areas that I was talking about that are possible to be extreme lows? I don't know. There's not really anything that's better than the other. It's just we have to imagine that both are possible. And of course, the alternative to that kind of like a bull run, like mini bull run, that like just doesn't reach an all-time high, but it's a mini bull run and then crashes us down, would be just to, chop it out and accumulate for months, right? And then go once the macroeconomics clear up, whether it's, end of this year or whether it's end of next year, nobody knows, because this could be a more protracted negative market than people think. But there absolutely will be pumps along the way. And even in 2018, when we did have this, you did get a run and then you came back down and then you went back up and then you had COVID and then blah, blah, blah. Right? So again, there will be chances to make money. It's just that right now, we are just in a very confusing area. We're not holding on to these levels that would bring us up into this kind of bullish range. It looks like we're kind of losing those levels. In fact, this does not instill confidence. Okay, let's just see what kind of retracement that is. I mean, that's not the worst retracement if you take it off the bottom here. If you take it here, it's still pretty good. So, we're just in that zone. We need to see what happens with this response on this bounce. And the setup is actually fairly decent. Like, I'm not gonna lie, the setup is fairly decent. We have kind of high volatility here, but that does mean that we have this chance for some type of just correction. And we have this, you know, we have space to expand to the upside, basically. As far as the, yeah, I mean, we'll have to watch this. So for these indicators, this is just, I don't use the RSI on this one. Maybe I should, but, for the ADX, I mean, it looks okay. Like maybe this could pop us up, and we are seeing some. We're back at 29.7, so that's funny, man. Some of these prices are really off. But yeah, we are back at 29.7, so we had lost 29.5 for a while, and that's when I was getting worried. Like if we had lost 29.5, it was looking like some of these things could get uncrossed. But as long as we can hold over this 29.7, yeah, then maybe this bullishness can play out. I do like the setup on the ADX. I do like the setup on the RSI, although we know this one can be faked out considerably. in a downtrend. So for example, we, when we're in this bearish control zone, you can have kind of just like really mini pumps and everyone gets super excited, but it's a good move, right? It's a good move. Like this was, 12%, like that's a good move. And then we go sideways and then suddenly we have a dramatic drop, right? Well, we're kind of in that area where that could happen again. Um, it's just really hard to say. It's really hard to say. However, the rest of the yeah, and even this one, because we've lost the moving average. We didn't bounce off of it. If we bounce off the moving average of this volatility, I would expect us to just continue to expand, but we lost it. And when we lose it, like here we lost it, and it was a dramatic drop. So yeah, just guys, just play it safe today. Just play it safe. A lot of this looks like a great setup, but it's really borderline if you look at it in detail. Let's see the 4 hour. Yeah. Yeah, some of this is not looking great. Like if we're under 30,000, like the 4 hour doesn't look happy. Hmm. Yeah, the daily still has a chance, but the 4 hour is not looking happy, guys. Okay, like I don't know what else to tell you. Just very weak, very middle. And let me go ahead and just as a final thing, because I want to keep this episode short, let me just jump over to stocks really quick and show you what's going on here. You can see my favorite, the NAS 100, in order to, put that against Bitcoin. And what I'm looking at here is just the NAS 100. We had this nice bounce, which was great. This bullish divergence definitely played out, but look, we have this hidden bearish divergence that's starting to play out. Um, just nothing looks particularly strong. We didn't take out this level. We didn't even reach the top of this channel. We've got wicks on both sides about similar heights on this 4 hour. Let's look at the daily. Yeah, it's very indecisive looking, very middle of the range. You guys don't need to play the middle of the range. Like, wait to see if we get to 12,000 or if we can secure like 12,400. And otherwise, we're just kind of floating in this space. And we're just going to have to watch for maybe a day or two just to see which direction does this market take. A lot of, a lot of this kind of bullishness does come off of, if you look at these shapes here, right? It's like a W. It's like a W. There's some fake outs, like this one. This one was a fake out. Here's a W that faked out. But in general, whenever you get these kind of Ws on the NAS 100, like this was a kind of a big one, then you get some bullishness, right? Like this was actually a big W. You get some bullishness that goes along with it. But I really don't like that this was so weak, this was so weak, and, I want to see this W to expect some upside. If there's going to be upside, I want to see a W, playing out. I don't like this V being this weak because that just suggests to me we're coming back down. Um, it could be, I mean, yeah, just for me, it suggests that we're probably coming back down. Okay, guys. So I'm still open-minded that the daily plays out over a couple days on Bitcoin. Like maybe if stocks like get a nice double bottom or get some type of a higher low on this formation. But I'm just thinking it might take a day or two to play out and to get some real clarity on the issue. So until then, guys, yeah, not much to say, you know. Take your profits if you haven't taken profit. Again, like some of these things, right? Like I had these areas. A lot of people thought we'd never get down to these areas. Like I had this area, and if you bought in here, 124%, right? Maybe even more because I didn't measure the absolute bottom or the absolute top, but 100% profit, 100% profit. And if you look at this, it doesn't look particularly convincing, does it? Like it might want to continue to try down, down again. Let's put on our EMAs. It's just kind of revisiting this area. Could we get a little squeeze play going in here? Yeah, sure. Um, that's definitely possible. I do like that it's holding the 10, but let's see what Bitcoin looks like on the daily with the EMAs. We doing something similar? No, no, we're not. We're getting rejected actually. So yeah, I mean it came up to test the 10 EMA on the daily, and then it just got rejected. So what am I gonna use? The 4 hour. It's just very weak in comparison to the daily, or and on the weekly, we're just looking pretty ugly, right? Like pretty ugly. And you see how the 10 is up here? Like that's that $35,000 area. So by the time we bounce up there, it's probably going to be approximately 35,000. I wouldn't be surprised if we just check back to the 10 like sometime this week, okay? Maybe stocks put in a W bottom, like a double bottom, and then Bitcoin checks, this 10 and then continues on its way down. That's just the scenario that I'm looking at with this very super weak price action of 1, 2, 3, 4, 5, 6, 7, and then the possibility of 8 weeks in a row red. 6 days left, but there's the possibility of 8 weeks row in red, which has never happened before in the history of Bitcoin. Okay, so yeah, just stay safe. Like most likely, we're gonna get a bounce within this week because this is too many weeks red in a row. This we've fallen the same distance that we've fallen, in May. Like there should be a green week at some point, right? We've got this bullish divergence, like kind of building up here on some of the various indicators, and there's a good chance that we could continue to come up here to like 35K. But it doesn't have to happen. It doesn't have to happen. And in 2018, under very similar circumstances, let's see, you've got this directional down, you've got you know, you've got your volatility expanding. Let's see, where are we? Let's put a line on here. Let's go right there. Yep. This one hasn't even bottomed, but this one kept falling before it bottomed. Expanding here. Yep. So we're more, yeah, I mean, we're like, this is the same setup as here. This is the same setup as in 2018. Yeah, I mean, the ADX is almost identical. Look at this crossover right here. Look at this positioning. And then the various oscillators, I mean, these are equally as sloppy. This one actually looks worse to me right now. I mean, there's a little bit. No, I mean this is all super sloppy. This isn't what you want to see. And then even though the Stoke is obviously against the ground, this one's higher, so it even has more potential to go low. Yeah, guys, I wish I could give a better assessment. I wish I could say that we were just gonna bounce or something, but look at this momentum to the downside. Like we had the similar negative momentum, but it's even worse right now. And of course our RSI that we already talked about. But let's see, what's this one saying? Continue falling below 31,200. Yeah, so similar, right? I was saying under 30,000. Continue falling below 36,000. I mean, I don't think we're getting to 36,000. So I've already talked about the $35,000 area, like using another method, right? So look, if we get above that 35,000, okay, great. Let's see what happens this week. But if we just use the analogy of 2018, like we're literally here, right? So let me bring this down to like some multi-day view, maybe like a 2-day. Let's go to a 12-hour actually, just to see how price really bounced around during those times. And so this is approximately where, this is our analogy point. And look, yeah, you got like bounces here, you got bounces here. So what was this bounce? This bounce was 10%. This bounce, oh, there's a wick all the way up here. This bounce was 17%. Okay. So probably we're like on this type of thing, right? Like in 2018, they just like combine, they had these two drives and we have had one drive, but we're getting that same type of bounce. And then what happened? It continued to go down. We have the exact same setup on Bitcoin today that we have right here. And I've proven it to you. I've shown you like how it's identical to our current setup. And so, yeah, I mean, look, we were 29.7, we're 29.5. Like this thing just, it's struggling. It's really struggling. And yeah, breaking 29,000 would be very ugly. Yeah, I mean, we don't want to get under 28,000 or we're probably going to see the bottom again. This is going to be a range and we're going to see the bottom and maybe we could double bottom and bounce from there, or maybe we're just going to continue crashing. Okay, guys. Yeah, I spent more time than I wanted to on this. I keep trying to make short videos, but we'll just do our best. I'm making fewer of them because as long as whatever I said holds up and is true for several days, then I don't think I need to make a bunch of videos. But I felt that this morning is important to watch stocks, to see what stocks do, and then to also remind people not to get too bullish. You don't have to be bearish, but don't get too bullish because that setup is the same as 2018. And if we're looking at stocks right now, obviously, we're getting a little bit of green on the board, so potentially we could see a pump, but we're still middle of the range. It's Monday morning, in the very early morning, 6 a.m. on the East Coast right now when I'm recording this. And so just watch, just see how this clarifies on stocks, okay? And if it comes back down, or if it pumps up, make your decisions after that. Don't don't do anything too rash right now. Now is not the time to now is not the time to just go all in, or just have your levels. Make your levels and make your decisions. Okay, guys. Sorry that's not a little more clarifying, but let's watch this week and see how it chops around and how it stacks up. So that was your alpha for the day. Stay safe and happy trading.